So Zeb Smith with Ascent. I am standing outside right now. It's middle of March, and last night, just out of the blue, we had probably, I don't know, like 6, 8 inches or something, just all of a sudden dump. And I mean, just check this out. So like right there's my pup, and it's a white wonderland, right? So very interesting time we're living in, right? Anyways, I much appreciate all your guys' feedback in terms of these videos. They've been well received and super appreciated, so I'm going to keep providing information to you guys in hopes to alleviate a lot of the burden with running a business in such turbulent times, right? So use me as a resource. Reach out to me, comment in the comment box down below as to like what's on your mind, and if there's anything from a financial perspective especially that you have questions on, reach out, right? And you got to ask it. So ask the question. Most likely somebody else has the same question, and I'll build some material and provide answers to you. Okay. So, unless you're under a rock, which probably isn't really a bad place to be right now, there's a lot of significant changes taking place in the world today. Most likely, so these changes are going to have an impact on you, your family, your community, and your business. It's a really good idea to look internally and critically evaluate your options. Do you shut down? Do you ride things out? Do you wait until something specific changes? These are all questions as entrepreneurs and business owners that we're asking ourselves right now. And there are also questions we should be proactive in answering, getting answers to. Okay? So as an exercise I'm going through with my clients right now is we're doing some what if scenario planning. The scenarios we're playing with are: what happens if this thing rebounds at the beginning of the summer? What happens if it rebounds in the middle of the summer? And what happens if there's no rebound at all? I'm going to go ahead and give you all the tools that you need to know on how to do the exercises associated with this what if scenario planning. And there's a lot of info here, so stick with me. Watch the video once, watch it twice, and reach out if you need help doing it, okay? This stuff will reduce your losses, as well as in the better times, boost your profits, okay? Which boosting profits means better owner pay, better pay for your employees, savings for the future, okay? You name it. So these tactics are good for not only in times of crisis, but in general other years as well, okay? Are you ready? So there are a few key things we are looking at, all of which I'd highly suggest you nail down for yourselves as well. Start with the worst case scenario. Before I go into this, these are the things you should always have a pulse on, regardless of economic crisis or not. I can't emphasize this enough. Knowing these all the time will drastically reduce stress around money and help make sensible decisions all year long. If you don't know this, use this as an opportunity to figure it out now and make it a priority to evaluate frequently in the future, okay? So scenario one, we're going to start with the worst, total shutdown. You're going to want to look at and find your fixed cash demands. So these are going to be your contracts for leases, professional service agreements, any vendors you're in year-long contracts with that you can't simply just like shut down today, and any customer prepayments you are currently holding on to. It includes debt payments as well. Wages paid to key employees that you can't afford to lose, including yourself as the owner and other top managers within your business. Total all of these figures out, figure all of these out, total them up, and that amount is the cash you need to pay if you were to just have to shut your doors and close them down today, right? Be sure to look long term as well. So what's the total until next year when season starts back up again? Itemize these out and think up a plan on what to do with each of these should something happen. You'll probably need to read your agreements, call up your banks, maybe even discuss options with an attorney, okay? If you were to shut down today, what would you also need to reboot next season, right? So this is the second part in the scenario planning, and the oh shit worst case scenario planning is we figured out what your fixed costs are, But what do we also need to spend next year to reboost next season? What would you need to do to recruit new guides, new employees, etc.? What professionals will you need to hire to help, including advertising and promotion that will let you jumpstart next year, right? Itemize these out as well. So accumulate all of this, and these are your future cash demands, including the amount you'll need to pay yourself. What's that total? Write it down, okay? Look at that number and compare it to your cash reserves. How do these fixed cash demands and next year reboot costs stack up against your cash reserves? If your cash balance is higher, then you're in good shape and have some flexibility when making decisions. If your cash is lower, then you need to look at alternate funding sources, right? Or even just help and assistance. Where the first places to look is what can you contribute as an owner? So where are your personal savings at? And see if you as an owner can personally afford to float things until next season. If not, then what options are available to help you fund it? Okay, so what avails to help to fund you, essentially? This can include third-party investors, debt arrangements, or government bailout options, which are possibly an option this year, just monitoring the news and everything else that's going on, right? So keep a pulse on those. Just know, investors and debt has to be paid back at some point. So it's often in your best interest, oftentimes, to avoid these as much as possible. If you can avoid these, then I highly encourage you seek help. Or if you can't avoid these, my bad. If you can't avoid debt or investors, I highly encourage you seek help to evaluate like how much you need to ask for and potentially even hire some counsel as well, okay? So that's enough for the worst case scenario. Whew, we got all that information out, okay? So now it's time for scenario 2. And this is your midsummer rebound, at least what we're looking at it from our perspective with the clients that I'm with right now, okay? We know how much your total fixed cash demands are. Now let's look into your variable costs to provide your services to your customers, okay? These are going to be the items that directly correlate to delivering your goods and your services to your customer. In the tour and outfitting world, these are going to be your guide costs, your transportation costs, your fuel costs, trip meals, and so forth, okay? From a customer's perspective, it's essentially what I'm going to put my customer hat on, okay? See it? I'm wearing it. It's essentially what I'm buying and receiving directly in return for the money that I give you, okay? So customer hat off, accountant hat back on. These are called your cost of sales. So what you should know about these, and if you don't know this, what you should find out is your gross profit margin, all right? I'm going to get out from the snow underneath here. It's starting to fall on me. How you calculate your gross profit margin is to tally up all of the total costs to deliver that good and divide it by your revenue. This is the amount it costs you, the business, to deliver your product or service to your customer. Subtract this percentage from 1, and so subtract your percentage from 1, and you have your gross profit margin. The gross profit margin tells you for every dollar you sell, the business retains X dollars. So for example, if you sell a $100 trip, you know it costs you $25 to deliver that trip. $100 less $25 is $75. So your gross profit margin is $75. As a percentage, it's 75%, right? So take your total fixed cash demands from scenario 1, divide this by your gross profit margin percentage, and add in another 10 to 20% for tax savings and unforeseen issues, and voila, you have a safe break-even point. This means in order for you to pay your fixed costs, including key employee wages, yourself included, and deliver your services to your customers, you need to sell at least this amount to break even. So look at this number. In light of everything going on, is it manageable? If there's no effing way that you can foresee selling this amount, use this knowledge to help you decide to stay open or not. A bonus real quick, okay? It is a good idea to know your gross profit margin for the full year, as well as different seasons within the year, whether it be quarterly, monthly, or some other set period of time, okay? All right, scenario 1, worst case scenario, done. Scenario 2, midsummer rebound. We're going to consider to keep the doors open, hope to break even, okay? Scenario 3, an early summer rebound. All is good, so nothing really to do here, okay? Other than to count your blessings that this shitstorm didn't turn into anything bigger. Use it as a learning lesson to always have your finger on the pulse of your long-term cash demands, the contracts you're in, know your gross profit margin, and understand your break-even point. Double bonus for scenario 3. Use what you learned during the previous 2 scenarios and do standard cost management tactics, which include canceling unneeded subscriptions, renegotiating with vendors, rebalancing employee efforts, and so much more, okay? This is how you use the information to maximize your profits, boost your business, set up cash reserves, and set up cash reserves so you don't have to stress about this kind of situation again. For another video, here's another thought, is the next step would be to actually take this to the next level, would be to define your needs as the owner, calculate your annual compensation, including your pay, profit savings, tax savings, and combine that with the information captured in these scenarios to determine the price you actually charge your customers, and ultimately position your business to meet your personal quality of life goals. But that's a whole nother video to go through, okay? All right, that's a lot of information. You should have all the stuff to be able to do this and available at your fingertips, okay? If you don't, your accountant or bookkeeper will. Also, your chart of accounts might need to be reorganized a little bit in a way to easily pull this information together. You might have to spend some time reorganizing things a bit, but it's not super hard. It does take some additional time, and it's totally worth it, okay? So that's it. You do this for your business, and you will be so much more confident in your future, or at least you'll have better direction on how to handle this epidemic. If you find this information useful, or there's something else you want me to dive into, please use the comment box below and let me know. You can also shoot me a message directly. So keep your heads up. Don't freak out. Wash your hands and distance yourself from society a bit. A lot of your business can be done virtually, so be productive from the safety of your own home and start doing the right things to make the best informed decisions for your business. Zeb Smith with Ascent.